Trading with technical price charts, all right? How to build a directional bias with TradingView. All right, this is TradingView. I'm using a 2-chart window. We'll talk more about the setups and how I get the indicators and everything in the forward sections of this course. All right, what I want to do is let you know how I use it. When I'm trading futures spreads, I'm looking for swing trades. So I'm looking at wider time frames regardless. Now, looking even at intraday trading styles, just a quick note, you should be looking probably at macro time frame initially, but your key emphasis is shorter time frames. Guys that are day trading are looking at things like maybe a 5-minute chart on one side and a 3-minute on another, and they're using different kind of indicators to look at where volume is for the day, where the opening breaks are, and things like that. With us, what I care about doing is maybe looking, at a daily, a 4-hour, 2-hour, but I'll start first wide and I'll come down. And if I'm looking for a little bit of a swing trade or whatever, I might look a little bit intermediary, like a 2-hour. Okay, point of this video, I'm not going to show you guys the whole setup, but I'm going to show you guys how to technically have an approach and look at key value areas, especially in commodities and futures. There's very, very significant price areas in charts, and they reflect on charts because a chart is just printing visual data of where price is at a certain time on the bottom and the price axis on the right. Be patient, professionals that already know this. Just because I get a couple amateurs in here every now and then, I like them to learn because they're right. Okay, so what I'm doing is I'm looking at key areas. Commodities have very good areas. If you get really good at this, you could find this on stocks too. Okay, because institutes, buyers, producers, there's mega funds in here, and it just happens to be at certain price points that are key value areas. Remember we talked about the auction price in earlier videos about the depth of market and price, the bid and ask, and what is all that? It's an auction. And when big people, big retail traders, speculators, and producers, merchants, and all that find value in areas to buy and sell amongst each other, that's what they do. And we're using the technical, state-of-the-art tools to find them so we could exploit them too, and then just put on a spread trade. Now, this is going to come down to the ability for you to day trade this. If you have the money, you can you can outright trade it and get the whole capacity of the move. But we're going to start swing trading spread charts. It's going to keep things more in line. It's going to keep you safer. It's going to make you much more consistent. And if you had the budget, guys, by all means, I'm not biased or against outright trading. It's just harder to do financially, and you got to be there full time. And I wouldn't be in any trade like that away from a desk or overnight. It all just depends. Okay, so we have intraday trading. That's the smaller time frame. In this case, I'm using a higher time frame. In this case, you see crude oil here to do that. If I'm looking at nat gas, same thing. We had a good commentary put out recently where nat gas made a good run up off double bottoms, off all-time lows, and we ran up so fast we had a 50% pullback. I use tools like Fibonacci extensions, and we do that in the groups and things like that to show that we've had a really clean pullback. I'm looking on taking along in this position here starting tomorrow when the market opens. It's the Easter weekend while I'm recording this, by the way. All right, so with that, again, look at these areas, how they're very, very responsive to key price areas. And so when that happens, I'm taking a technical approach. Okay, if I'm looking at seasonality, I want to come in here and maybe confirm that. And here's why I say that seasonality is not all that it's made to be as far as just the primary thing. It was a big mistake that was being done, big failure on my part in version 1. And in V2, we want to go back to our technical rules and just look at the value of the front of the contract of what it is. In this case, it's nat gas. If you want to take a nat gas spread trade, and you found this trade over here on April 2nd or around this area, April 3rd, it pulled back, you take a nice long trade, and you would have made a significant amount, a percentage of the total amount that an outright trader would have on a simple, easy spread trade that would have been affordable with span margin because span margin would allow you to get in this thing and stay in it overnight versus nat gas, which you have to have thousands of dollars to trade just one contract. You would have been in this thing for a few $100. It would have been a good faith deposit. Okay, that's what span margin is, out of your account, temporarily holding a certain amount until you decide it's time to get out. You might have not known it's time to get out here, but as you get better at the charts, you're going to see that. And we're going to teach you that. We're going to go through that. We're going to keep doing it and doing it and doing it until you get good. And you can do this in Forex, guys. You can do this with stocks. That's the coolest thing. But here, we're going to utilize technical approach to get in trades sooner than normal, stay out of them when we should be, and get out of them before we lose more money. So you want to be more profitable with technical charts by getting in trades and staying in them longer if we need to, and getting out of them sooner to save our butts. I hope that this information helps to give you a good idea of what we're going to be going through as you set up your TradingView trial. If you already have TradingView and you're a professional, that's awesome. Good for you. We'll just keep moving on to the next step. Hope the other prior chapter was helpful as well on the seasonality. Again, there was about a 1 hour video and I had that in context from a year ago. Hope it all just makes sense. And we're going to go through it again. You can put that little bit on the shelf for now, not put it away completely as we progress into the next chapters here. The next video is going to be about fundamental resources. Again, guys, I've told you I'm not a fan of it. I don't follow it. As long as I'm aware of things, it helps me stay out of things, and it helps you understand things at a later time as far as having a peace of mind on why what happened. But I don't care about it, but I want other people to know about it. Okay, there's people here that diverse, come from different communities and mentality and backgrounds, and they just want to have resource skill and stuff like that. Load up a bunch of sites in your favorites. Well, enjoy the next chapter, and we'll see you there, okay? This is going to be forward-looking on this stuff. When we go into setting up workspaces, we'll go into setting up all the indicators off the charts that I was showing you guys. You know, how to get indicators for free, how to save them in your workspace, how to set up a workspace. We used to do this stuff manually in version 1. I was sitting here and having people manually draw a support resistance line. Now we have tools we can get that are dynamic, they're drawing these things on their own. And a couple other indicators that I use for stuff and strategy and confirmation tools. We use them to confirm a little bit of our bias. You know, there's buy sell signals I was using that use Bollinger Band systems and things like that. So it's going to be really cool. You can also use EMAs. That a friend of mine created that's a day trader full-time, and it helps us identify if we're on the buying side of potentially of trades or seller side on the higher time frames, because certain people and certain institutes look at all that. That's the whole aspect of technical. Some people I say technical trading doesn't work. It's all a bunch of BS. Here's the point I want to just make clear, and I'll say it one time. If a bunch of people are looking at something, it doesn't matter if it's donkey poop. If it works for them, if a lot of people are looking at it, there's a reason why it works. And there's reasons why these levels speak to us and they do something. Why does price turn at certain prices? It's not just a coincidence. It's not just some kind of magic. Okay, so technical stuff works. I always tell people, pay attention to the ones that are telling you technical doesn't work. They have a bias. And usually it's guys from like Goldman Sachs and things like that. We have tools now, extraordinary tools to the retail market that were never available before 10, 20 years ago. And now they're available at your fingertips for cheap and pennies on the dollar on commissions. And they're just haters. Okay, they're hatey hates, I call them. So with that said, guys, let's move on to the next section, my not so favorite fundamental resources.